If you want to buy your first home but are falling short of what you can borrow, the First Home Scheme might be suitable for you. This video explains what you need to know. The First Home Scheme is a government initiative designed to help first-time buyers bridge the gap between the mortgage they can get and the home they actually want to buy. Under central bank mortgage rules, you can only borrow up to 4 times your gross income, but with house prices so high, this often isn't enough. That's where the First Home Scheme comes in. The First Home Scheme is a shared equity scheme in which the government takes a stake or share in your home in return for providing you with money towards buying it. It's open to single and joint applicants, and the maximum stake the government can provide is 30% of the price of the property that you want to buy. Let's say that you and your partner earn a combined €100,000 a year. You want to buy a home that costs €500,000 and you have your €50,000 deposit, but you can only borrow 4 times your income, or in this case, €400,000. So that leaves a €50,000 shortfall. Under the First Home Scheme, the government will give you €50,000 or 10% of the property price in this example in return for a 10% stake in your home. The scheme is open to first-time buyers and also to people who've been divorced or declared bankrupt who may have previously owned a home but no longer do so. But you must be buying a new build or a self-built property. The scheme does not apply to second-hand homes. There are also caps on the value of the home that you can buy, which vary by location, and you must still have your 10% deposit. Also, the government owns a share of your home, so if you sell it in the future and the value of your home has increased, the government will get their cut based on the new higher price. You can repay the government stake whenever you want, in full or in part, but there is no timeline for this. But if you sell your home, any money you owe the government will be taken from the sale price. And if you die before all the money has been repaid, the money will be taken from your estate. Also, a service charge will eventually apply to the money the government has provided, unless you've paid it back, of course. There is no service charge for the first 5 years. After that, a 1.75% charge kicks in and increases over time. It's important to remember that this service charge is on top of the amount you owe the government. The service charge you pay will not reduce the government stake in your home, which will still be repayable at some stage, and you'll be paying this service charge on top of your mortgage. You can't use the First Home Scheme alongside a mortgage exemption, so chat to your broker about which option might be better to apply for. But you can use the scheme along with the Help to Buy scheme, but in this case the government stake is then capped at 20%. At the moment, you can only apply for the scheme if you're taking out a mortgage with AIB, including its subsidiaries EBS and Haven, Bank of Ireland and PTSB. If you're struggling to bridge the affordability gap, it might be worth considering the First Home Scheme. There are a few more terms and conditions, so click on the link in the description below for our guide which has more info. And remember, at bonkers.ie we provide a free mortgage broker service, so chat to us if you're thinking of buying your first home. Our team of in-house experts can advise you on everything mortgage related, including the government schemes you can apply for, and they'll help you with every stage of your mortgage journey from initial application to drawdown. To get mortgage approval, you'll also need mortgage protection and home insurance, and guess what? You can sort those too on bonkers.ie. Thanks for watching. If you have any comments, leave them below, and don't forget to like and subscribe to our channel for more information and helpful tips. Bonkers.ie, we're on the money.